everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In these videos, we talk about the news that affects the market and then put it in perspective using our Elliott Wave charts. In this video, we'll be featuring the symbols you see on your screen now. And remember, if there's a particular symbol you're interested in, you can click right on it, go directly to it in the chapters feature in the video. Now, let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. If you like these videos, please hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks, we really do appreciate it. All right, the big news out of the markets, as you can see, the wave 4 has been labeled on the SPY chart. It had already been labeled on the DIA, but now it's labeled here on the wave 4, and it's right at a fib level, right at the 38.2% fib level. Is that a strong enough fib level to hold resistance here and start a wave 5 lower, or are we going to bounce back to the upside? We've been talking about this in TradeFinder the past couple of weeks, been talking about it in our shorts videos as well. The key here is this trading range between 360 and 380. Even though we had a reversal day in the market today, opened lower and then took off to the upside, I'll tell you why that occurred here in a moment. Nothing really matters until we break above 380 or below 360. We're just in this trading range going back and forth. And by the way, if you haven't been to a TradeFinder yet, you can sign up underneath this video or go to our website at ewotrader.com. We do it every Tuesday night at 9 p.m. Eastern Time. It's free. We talk the markets, we look for trade ideas, and we have a live Q&A. Love to have you at the next meeting. All right, so when we take a look at this chart here, you can see that we are above the 10-day moving average. If we break above 380 with the wave 4 just at the 38.2% level, we could continue up and create a wave 4 up to the 61.8% level. Maybe up around 390 or so is where that would occur, maybe up as high as 400. Last week, y'all kind of gave me a hard time when I was talking about the potential for this wave 4 to be formed, saying I was too bullish. Well, we did form the wave 4. Now the only question is, how far does the corrective move go? Or does the market reverse at the beginning of the week and we break below 360 and then we're coming down in the wave 5? The one thing we do know is this wave 3 is not going to extend down here for a bounce in the wave 4 and then a lower low from there. There is a possibility that this wave 5 target down here could be the low in the market. We'll see once it gets there. I said there was reasons for the market to reverse today, and that was the 10-year and the dollar. I'll show you that in a second as well. Both reversed. Both opened higher and then started to reverse, and as soon as they did, the market took off. It's like the market was just waiting for some sort of a break between the dollar and interest rates to give it room to move to the upside. And so this reversal in rates, but you can see why on the open there we were above the 10-day moving average, so we were extended here on rates, and interest rates needed to take a break, starting to go a little bit vertical there. And then if we take a look at the dollar, we had a reversal in the dollar last night. In our insiders meeting, we do that every Thursday night for our alert subscribers. We talked about this triangle and the ramifications depending on which direction we break out of the dollar. If we break to the upside, well, that's probably not a good sign. Breaking lower, that could give a little bit of relief to the market, especially for international companies with the exchange rates and all the things we've talked about. Well, look at this bar. We look like we're going to break to the upside, and then we close lower. Looks like we might be breaking to the downside. So we got a big outside day bar here without really giving us any indication of what direction we're going to go from the dollar. So we'll be watching that really closely. Again, with money moving into the dollar, it's concerning as far as global recession more than just the U.S. If we look at the VIX, you can see that, yeah, we're ticking down here a little bit. We haven't made that much of a rally, so you can understand that the VIX hasn't come down that much, but the key is we did at least close below 30, and we'll see if that downtrend can continue or if we're going to come down here around 28, which is where we found some support last time, right here in early October, and bounce back to the upside again. We take a look at the diamonds. I said that the wave 4 had already labeled there. Look, it's already up at a 50% correction. We also discussed this last night as well. Is the Dow now becoming a market leader after decades of the SPY taking over the mantle? It used to be the Dow was the thing, right? The big top 30 industrial companies, and then we got away from that, and people were looking at the Qs and the NASDAQ and the SPY. But now it looks like the Dow's saying, hey, we're going to be the leader here, and they're a little bit ahead as far as that wave 4. Now, is that a signal the SPY is going to go up to the same 50% level? That's going to be the interesting point to see how far this wave 4 goes on the DIA. Looking at the Qs, well, they're lagging, just as though we've been talking about this all year, and it's going to continue to be that way, in my opinion, as long as the Federal Reserve is doing their thing with raising rates, and inflation is just going to be very difficult on the Qs. They haven't labeled their wave 4. They haven't bounced enough to actually create and label a wave 4. So I would expect to see some sort of a move back to the upside, especially if the SPY and the diamonds continue their move. But it's looked like it's going to be a weak wave 4 bounce there. When we look at the Russell, last night we were talking about would there be follow through to the downside because we had broken back below 170, and the answer to that is no. We were back above 170. You know the deal with the IWM. By now it's this trading range between 170 and 190. Every time it tries to break below 170, it manages to find its way back above there, and as long as it can do that, it's okay. You can see the wave 4 is labeled there as well at a 45% wave 4 corrective level. So it could go up to 61.8 as well, or maybe we just reverse back down, but we'll see how that plays out. And then Bitcoin. You know, Bitcoin is just, if you want to say something that could be interesting about what's been going on in Bitcoin, we do have a little bit of a symmetrical triangle here. So we've been talking about 18,000, 20,000. The range has been so boring about Bitcoin staying there the entire time, but we do have at least a little bit of a symmetrical triangle. The problem is when you look at the ADX, it's still at 15, meaning that could continue. But I'm curious what you think. I mean, let's do something to make Bitcoin interesting. Do you think it breaks out of this triangle to the upside? Does Bitcoin finally get a bid, or does it break to the downside and head down towards that 12,000, 16,000 level, somewhere in there? Post a comment underneath the video. Be interested to hear what you have to say. All right, some stocks of interest. You guys asked for it, so we'll go ahead and show the charts that y'all asked for out of the last video. Nvidia, pretty key level here, right at 120. I'm going to show you that more in a second. So it looks like we could have the end of the wave 5. It's trying to bounce. It's putting in some pretty decent support at 120. Here's why that's important. Look how far back 120 goes as a support resistance line on Nvidia, all the way back into 2020. So this is a key level here for Nvidia, and perhaps that moves back to the upside. We still have this gap here that is yet to be filled. So kind of looking a little bit bullish there on Nvidia. Pretty impressive hold there of that key level at 120. Gamestop. Now there's a Netflix special about that phenomenon that occurred with the meme hysteria, etc. But what's interesting about GameStop now is something's getting ready to happen. You can see this really nice consolidation here on the horizontal line, and then we have this set of lower highs. So we have a really well-formed descending triangle on GameStop. And then you look down here, you can see that the ADX is starting to creep up. I talk about that, use the analogy of lava boiling underneath a volcano. Before the breakout occurs, you know, before we blast off, we don't know that there's lavas boiling underneath the volcano, and then the top blows off. And that's kind of the same thing that happens when you have one of these corrective triangles that's about to break out. Sometimes that ADX will start to move up and tell you that that breakout is getting ready to occur. What it doesn't tell us is which direction the breakout is going to occur. Just because it's a descending triangle does not mean it's going to break to the downside. All triangles, whether ascending, descending, or symmetrical, can break in either direction. But there's going to be a breakout here. What do you think about this? Post a comment on this if you want. Which direction do you think GameStop breaks? Be interesting, especially with the fact that that new Netflix special just came out. Amazon. So here we are down on Amazon. We retrace the breakout of this triangle, and this is really important for Amazon to hold right here. And so far, it looks like it's trying to. If it doesn't, then we're back down to 100. We'll come down to these lows, exactly what we did on Tesla. We'll look at that chart in a moment. But holding here right at the point where we had the triangle, so we finished the wave 5, went into a corrective triangle, classic Elliott wave stuff here, broke to the upside, retraced it, and now it looks like we're trying to build back to the upside. There is a little bit of resistance right here at 120, but if we break above 120, there's room, because this was a fairly direct move to the downside without a lot of corrections in there. So if it breaks above 120, we could have something going on with Amazon. We could see 140 back to 145 pretty quickly. And again, all this is going to depend on how far this wave 4 bounce goes. Meta, not so good news here. It looks to me like this is not done going to the downside. The wave 5 is only at 58%. Easily could go to the 61.8% level. Just nothing looks positive in that chart to me. I think Meta is not done going to the downside. At some point in time, it's going to find a little point of support and could be all the way down at 100. Maybe it's at 120. I just feel like there's a little more to the downside to go here on Meta. It's just not ready to bounce. And then Tesla. Tesla, we talked about this in TradeFinder. It's a common stock people ask about in TradeFinder every week. We had this symmetrical triangle we broke down. We talked about if we didn't hold that level right at 240, kind of a la what Amazon is doing, then we were going to go down to these lows. And that's why I was just telling you that with Amazon. This is exactly what happened here. Now, the key is with Tesla, if we can't hold this 200 level, then we could go down as low as 140 or lower in Tesla. So this wave 5 target may not be the bottom. So Tesla needs to turn and find some footing here and move up into this wave 4 rather quickly, or it could be really ugly to the downside there. Now, the positive is we are at those lows that were formed from that symmetrical triangle. It is an area where it could find support and potentially bounce up in this wave 4. But the fact that it hasn't even started the wave 4 yet is concerning with Tesla. But next week we'll be watching to see, can we bounce off this level and head up to the wave 4. GLD, little bit of a bid here, but it's because we're down here testing the lows. And so perhaps we get some sort of a further bid in the metals, but I just don't think it's going to happen until the Fed pivots once they get out of the rate hike. And immediately switch, which I think is going to occur, into cutting rates. That'll be the point where I think the metals take off. They'll have just so much pent-up downward pressure here. You get short covering and everything else. We got a bit of a descending triangle here, so perhaps it happens sooner rather than later. But the Federal Reserve, to me, for this to break to the upside now, is going to have to start to hint that they're about done. And I just don't see that coming yet. Maybe it is, but we'll have to wait and see. UNG, natural gas, look at this. To me, this is oversold. I felt like natural gas was going to go lower when we were up here in the consolidation. I was talking to our subscribers about that. And then it broke almost vertically to the downside. So it's got a couple things going against this downward move. One, it's a bit too vertical. And so a vertical downward move is the same as the upward move. They usually don't hold, they get retraced. We'll go straight up, come straight back down, and vice versa. But you can see here, not only has it gone down vertically, but there's separation with the 10-day moving average here. So I feel like UNG is a little overdone to the downside here, and perhaps we get a bounce. That doesn't mean, I'm not trying to say that it's done going down for good, because we are starting to already look towards the springtime. It's in a season where natural gas usually struggles a bit. I just think in the short term here, it's oversold, due for a bounce, and once that bounce occurs, then we'll take a look at it and see if this is the bottom or if there's lower lows to come, which I think is probably the likely scenario. Australia hanging in there really well at this 20 level. Nice base here at 20, bouncing up. Problem is it's going to bump its head quickly at 21. Can it break through there? We'll see how that plays out. But pretty nice pattern here, right at a 61.8% wave 5 extension here. That's my favorite fib level. It's the strongest one in my opinion, and so far it's held nicely. Looking at Germany, a little bit of a bid here. So we came down here, we were wondering, oh my goodness, is that wave 5 going to relabel to a 3 again? And the German market said, no, we're done with that, at least in the short term. But the problem is we're at a little bit of resistance now because we're bumping our head against that wave 3 low from July. Can it get above there? If it can, then we have something brewing here in the EWG. But right now, this is an area that is important resistance. So can it break above here? Then we could possibly go all the way back up to that wave 4 if it's able to do that, but it has to do it first. And then I wanted to talk about Japan. Japan, been talking about all these black swan events. You've seen what's going on in England with the Bank of England, etc. The Prime Minister resigns. There's issues over there. The Credit Suisse news that we saw last weekend. And then now there was 3 days where in Japan their 10-year didn't even trade, and it's at a what 0.25, 0.26 rate. Well, who wants that when you can come over to the U.S. and get 4.6 on the 2-year? That's why all that foreign money is coming in to our markets. So I thought I would show you this, and we've got a big outside day here in Japan, and it doesn't look like any sort of a bounce. We're in a wave 3 lower. I think there's some issues there. So there's still a lot of black swans that exist, even though we've got a little bit of a reprieve here, a little bit of a bounce, and some bullish sprouts here and there. But well, you know, it wouldn't take much for one of those black swan things to cause another big downward swoop. But anyway, some interesting things to talk about this weekend for a while. Hope you have a great weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.